Hello, this is Scott Wentsel from Wentsel Wealth Management, and welcome to my market review for the fourth quarter of 2017. Since it is year end, I thought I'd really focus more on returns for all of 2017, and it was a great year for the markets. You can see the U.S. stock market was up over 21% for the year, and it was just such a steady, gradual increase with really very few declines. In fact, for the year, the S&P 500 had a positive total return for every month of the calendar year, and that's the first time that's ever happened. So really just a wonderful market for the year. And then if we look outside the U.S., you can see international developed stocks were up over 24%, and emerging market stocks were actually up over 37%. So non-U.S. stocks, in the past years have been lagging U.S. stocks, but this year, did a little bit better, and so global diversification paid off, and so that was a good thing. I'm just looking over at the bond side. You can see, a broad measure of the bond market was up 3.54%, and even non-U.S. bonds were up over 2% as well. So really, if you were an investor in almost anything for the year, you had a pretty good experience. This next slide just sort of shows a calendar for the year. You can see the steady gradual rise for the market throughout the year, and there's various news items put on this chart. And so, the idea is to really reflect back on think of all the political turmoil and all the negative news about North Korea, and we had 2 hurricanes, and the market in a way just sort of shrugged a lot of that off. The economy's been good, and the global economy is good, and so it's important to maintain a long-term perspective. And so our goal in investing is really just to, in a way, piggyback on the growth of the global economy and not get caught up in the short-term news. And so keeping a long-term perspective and staying invested is a good idea, and paid off certainly in 2017. This next slide digs a little bit deeper into the U.S. stock market, and you can see some different styles of stocks and how they did for the year. So you can see up here in this chart, large cap growth stocks did the best, and they actually returned over 30% for the year. Then small cap growth returned over 22%. So if you think about growth style stocks, really technology would be a prime example of the types of companies that had the best performance. And then the other, the flip side of growth investing is value investing. So things like financials, energy, some industrials, didn't do quite as well as the growth stocks. But again, they tend to balance each other out over time. So just a little recap of how growth investing was the best style for the year. And the other interesting thing is just over here, that U.S. stocks make up roughly half of the world stock market capitalization. So just going on to the next slide, looking at international developed stocks, and they make up 37% of the world stock market. And you can see actually in the international markets, smaller companies did better, so returned over 31%, and then growth style did slightly better than value style as well. And then what's interesting to see as well is looking in terms of U.S. currency and local currency. You can see kind of in each one of these bar charts, roughly a 10% differential between U.S. currency and local currency returns. And so what that means is the U.S. dollar actually declined in 2017, and so non-U.S. investing benefited to the roughly by 10% due to currency effects. So currency appreciation versus the dollar. So another source of return for non-U.S. investing last year. Then this slide, just kind of finishing off the stock markets, emerging markets, which accounts for 12% of the world market cap, had a very good year, so up, over 30%. You can see the various styles as well. So growth investing did slightly better than value investing, or actually quite a bit better. And then larger companies did a little bit better than smaller companies. So again, outside the U.S., consumer-oriented and technology companies led the way versus, think of maybe big energy or big financial companies probably lagging a little bit in emerging markets. Here's a slide just showing all the different countries around the world and how they performed. And the amazing thing is, look how broad-based the rally was last year, and almost every country had positive performance. So just a really good year to be an investor, and global diversification paid off as well. This slide just touches on the currency performance versus the US dollar. So I mentioned that. So you can see sort of major currencies. Here's the euro right here. Actually did quite well, appreciated 13% versus the dollar. The yen, not quite as strong, but still a positive versus the dollar. So, all these, besides the global stock markets doing well, the currency effect that you received by investing outside the U.S. also helped add to returns. And then just looking at the fixed income markets, the big thing that happened last year is the Federal Reserve raised interest rates 3 times. So they raised short-term interest rates, and that really had helped to flatten the yield curve. So what that means is shorter-term interest rates rose more than longer-term interest rates. And in the case of the Treasury market, the 10-year Treasury note increased in yield by just 7 basis points to 2.4%. And the 30-year Treasury actually declined a bit in yield. So yields on the longer end of the yield curve were fairly steady, and we saw rises in the shorter end of the yield curve. And as an example, the 5-year Treasury note had a yield increase of 28 basis points. And many people have maybe noticed money market accounts and bank savings accounts perhaps as well actually are starting to pay around 1%. So and the money markets anyway. So you can actually get a little bit more yield at the short end than a year ago. And last, we'll just take a quick look at the commodities markets, and you can see kind of a mixed bag of returns here. But picking out some of the more well-known commodities, oil had a good year and actually finished at a 2.5-year high. You can see Brent crude up 13%, and the West Texas crude up 4% for the year. Gold also was up over 10%. So those are some highlights. I guess on the downside, natural gas actually went down quite a bit. So that's in this heating season. That's at least helpful if you use natural gas to heat your home. That maybe it's a little cheaper than it was a year ago. So that's just a quick wrap-up of market returns for the year. If you have any questions about this information, please feel free to reach out and contact me. Thank you.